ShortMeTina here, once again from ShortMeTina.com with my daily recap. Today is Monday. We're back at it. The weekend is behind us. I had an awesome time with my family. I hope you enjoyed your weekend as well. Do us a solid in the comments section. Let me know what you did for the weekend. Also, if this is your very first time tuning in, I'd like to say welcome. Also, drop us a comment in the comment section. Let us know how you found us. So you can even let me know your name. Whatever you want to say, just comment in the comment section. If you are returning and you've listened to a ShortMeTina video every single day for the past few weeks, few months, I always say you could be doing a gazillion other things right now in this moment, but you choose to, at least in this moment, spend it with me, and for that I am forever grateful. So again, today's Monday, markets are opened. What do we have underway? Like I've indicated in previous videos, I think it's extremely fitting to start off our videos with our mission statement because it sets the tone, not only for the video, but for what we do overall in the ShortMeTina community. So what is our mission? Our mission really is to build a powerhouse of successful traders and help you find more winners. We conclude, if you win, we win, right? That's great. And I've gotten tons and tons of positive feedback from new traders who just stumbled upon us, whether it's several weeks, for the past several months, have listened to what we've had to say about the markets, has listened to a lot of the lessons that we teach, and have told me or sent numerous emails indicating that their trading has improved tremendously, vastly over the course of their time with me. So if I get emails like that day in and day out, I'm going to have to conclude what we're doing here works, right? I maintain you can teach, right? You can learn to trade, all right? Anyway, so that's our mission statement. But again, before we can do all that, before we can get you to the next level in your trading, in the comment section, do us a solid once more. Let me know what is your biggest, in big bold capital letters, what is your biggest frustration in reaching your trading goals. That way we can better help you. And lastly, I'm going to link it again because I think it's super important. I did a video outlining, in my opinion, what the 3 pillars are to successful trading. I would say that video is a must watch. Obviously, if you've been listening to me for a very long time, it's fine to watch it now. But if you're stumbling upon my or our website and you have absolutely no idea what we're about here, I think this this video, again, in my opinion, sets the tone for how I structure things or how I approach the market or how I view the market. All right. So before I lose my voice anymore, let's recap the overall markets. All right, so we have the SPY S&P 500 daily chart dating back to 2017. I took away a few lines, or a line we already know, or rather we've passed, in my opinion, those levels, so no need in the moment to focus on them. Let's zero in. What the focus is right now would be this purple line here, and that essentially represents resistance or all-time highs. Let's give it a range. We can say that range is 293 to 295, right? We closed at 289.37 on the day, up marginally. That's fine. We're less than 2% away from all-time highs, which signals to me the market is still acting very bullish. So we were rejected once from those levels here in September of 2018, and once again most recently in April of 2019. So let's see if the third time's the charm. Let's see if the market can actually make a push above that 293 to 295 level and hold. So that's what I'm paying attention to. That's what I'm holding out for. So again, sitting here 289.37, we're not too far from all-time highs, and that's really bullish in my opinion. Hence why overall I am bullish on the market. What else? And then we have the IWM daily chart. Tells a different story. I'm not quite sure percentage-wise how far we are from all-time highs, but all-time highs, we achieved that in September of 2018, clocks in at around, let's say 173, 174, sitting here at 152. We're about 20 points off of all-time highs. Again, percentage-wise, that might be about 8 to 10%. I'm not too sure. So in that regards, that's not the best. While the SPY is very, very close to all-time highs, the small cap index is about 8 or so percentage percent. It's about 8% or so away from all-time highs. Again, not the greatest in my opinion. We need the small caps to catch up, not just a little bit, but we need the small cap to catch up a lot. But in the meantime, we are doing some positive things. Again, we're above support or shorter term support of 148 to 150. That support level dates back to February of 2019. So about 4 months overall, we've managed to trade above 148 to 150. That's great. What I would like to happen, as I've indicated before, at least I think I've indicated, I don't want the IWM trading around 148, 150 for much longer, because the more time it hangs out in this area right here, close to this red line, which is support, the likelihood of it breaking increases. Hence why I want us to start drifting more so away from this red line and towards this blue line. This blue line is representative of resistance clocks in at 160. So that's what I'm paying attention to in the IWM. The SPY, in my opinion, tells a completely different story, very, very bullish, where the IWM, it seems to be struggling a little bit. But let's see, time will tell. So far, decent with us trading above 148 to 150. Again, we closed at 152.24. So within the next few weeks, hopefully either to end the second quarter, kick off the third quarter, maybe the small caps will get going a little bit and lead the overall markets. What else? All right, Zynga. So just to recap a little bit, I've been extremely bullish on Zynga. We took this trade in the premium member community when the stock was trading in the low to mid threes, right? So with a recent high of 655, we're up something like 70, 80, or perhaps even 90%. Not sure. Do the math. On this particular trade. So that's great. I do like the stock. I do see it hitting $8 at some point in 2019. However, like I indicated last week, right? Last week I said there seems to be there's shorter term, there are slight bearishness, if that makes any sense, within the stock, right? We're off about north of 3% on the day. Look at the selling here. Look at volume. I can even see it here. Closed at 602. The low clocked in at 6. I did say at some point Zynga will revisit, or you will see a print in the fives. And I don't think that we're too far from that. I think you can see that this week at some point. But this is where like the good traders, the great traders, and the not so great or good traders are separated. What are you going to do? Are you going to get fearful of this pullback? Or will you do like I tend to do? Will you buy the pullback? All right. Still see this longer term at $8. What else? All right. And then we have ticker NIO daily chart off. Actually, no, it's up. It's not off. It's up about 1.65% on the day to close at 246. Overall, though, the chart remains bearish in my opinion. You can see it's breaking down on all levels. Support that was established dating back to 2018 was broken around March of this year. We can say that level clocks in at around $6. Then you can see the stock here drifting lower. Establish another shorter term support right here, this blue line. We can call that 4 to 450. That also broke on volume. Stock drifted lower, and we sit here at 246. Yesterday the low was 235. Today once again the low was 235. We got a slight bounce. So the question is 235 the low? Is 235 the bottom? That remains to be seen. I actually did a video for anyone that subscribed to my emailing list on how to tell when the bear rate is over, how to tell when shorts have left the building, how to tell when they are getting out of your stock. So if you're interested, make sure to go to ShortMeTina.com and sign up. And eventually I will send you that video on how to tell when the bear rate is over. For now, I'm looking for those signs and those signals in ticker NIO. I haven't seen it as of yet, but those sorts of signs take time to unfold. So in the shorter term, still bearish on ticker NIO until otherwise, until there's a change in trend, and there has not been as of yet. What else? And then we have ticker BYND daily chart. So we closed at 169.96. The high of the day clocked in at 171.19. Obviously, the level to get above would be the most recent high or all-time highs of 186.43. Stock was up 12% on the day. You can see volume stepping in. So the minute we retest those levels, for example, if we get to 185 or 186 or 186.43 in this situation, and that target that I spoke about numerous times last week of $200 more than likely will be hit. I still see this as a $200 stock. So there's a potential for about 40 points or so of upside. Clearly, there is a significant amount of downside if incorrect. But I think that more than likely, just based on how the stock is acting, I can see 200, potentially even 300. But we're not there yet. First step is to obviously surpass 186.43 and then get to 200. What else? And then we have ticker VBIV off about 65% on the day, gap down. Huge selling with confirming volume. We closed at 65 cents. The low of the day clocked in at 57 cents. Anytime a stock is making all-time lows, you need to stay away from that stock. 52-week lows, all-time lows, not a stock to go long. Granted, considering the stock is off 65% on a day, you might get your pops. You're going to get your 9, 10, 15% overshoot. However, for me, the trend or the longer term trend is descending. So pay attention to the low today at 57 cents, a break below that. And I think that this can drift possibly to 40, even 30 cents. What else? All right, and then we have ticker VISL daily chart. Congrats to the bulls, up about 40% on the day. Although we closed at 215, the high of today clocked in at 357, clearly piercing resistance here of around $3. Stock eventually pulled back on the day to close at 215. Don't like the close, don't like the pullback. I'd be paying attention heading into tomorrow, the remainder of the week. Definitely pay attention to the high, not the high, but pay attention to that $3 resistance level. If it can get back above that, the stock can run. If it's having a hard time penetrating $3, and more than likely you'll see this at some point retest the most recent lows of around $1.47. What else? And then we have ticker PRPO daily chart off about 21% on the day. Huge selling, closed at 322 today. The low clocked in at 311. So not quite close to the low of the day, but we're not too far off. So heading into tomorrow, you definitely want to pay attention to that 311 mark, that low of today. If we drift towards that price point and we break that, more than likely this stock is headed to support of around 280, which is around this purple line. So in the shorter term, I'm bearish on ticker PRPO. But remember, when stocks are off by so much in one day, like 20%, 30%, 40%, expect your 10% days. Expect the pop before the decline continues, and that's a possibility with ticker PRPO. What else? And let me update everyone on Walmart. We closed at 109.16 today. Great price action from Walmart, like I indicated in previous videos. Anything above that 105, 106 area, and this stock can run. So the next level that I'm paying attention to is 110. If we surpass that, clearly see this as a $120 stock. Put ticker WMT on your radar, on your watch list. It's a stock that can put up 15, 20%, maybe even 30%, in my opinion, in 2019. What else? All right, let's wrap it up with ticker PLAY. It seems as though we got a little bit of a bounce today following that huge sell-off in one day of around 30 to 40%, up about 2% on the day, closed at 40.39. Is this it? Is ticker PLAY ready to run and potentially fill this gap? Time will tell. I don't think so, considering the huge sell-off on volume we had a few days ago. I think it takes time for that type of move to get digested, so I don't think that the stock is ready to run. But the real indicator would be, in my opinion, a retest of this $39.18 low, right? I feel that the stock needs to retest 39 one more time, and if it holds, more than likely that is the bottom. So to be continued with ticker PLAY. In the shorter term, I would stay away. Again, after this massive gap down here, it usually takes some time for that sort of move, for the stock to digest that sort of move and for things to recover. So that's kind of it. Tina here, once again from ShortMeTina.com. If you enjoyed any portion of this video, do 3 things for me. 1, comment in the comment section. Let me know whether or not you agree, disagree with any of my analysis. 2, I do videos Monday through Friday, so if you want to hear more videos like this, make sure you're subscribed to our YouTube channel at ShortMeTina. And lastly, I've been trading for well over 15 years. If you think you can learn anything from me, despite my, it sounds like I'm losing my voice. Am I losing my voice? I don't know. It sounds like that. Anyway, I've been trading for well over 15 years. If you think you can learn anything from me, then head on over to ShortMeTina.com, sign up, become a member. Thank you for listening, and as always,